Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. Equities markets are just settling and getting ready to close under tremendous pressure today. February 2nd, 2016. We're looking at the Dow Jones Industrial Average, currently trading off about 300 points, triple digits again to the downside, 16,148. That is our current print. Now it's traded to a low of 16,108. So we're only about 40 points off the low, the high 16,420. So about 300 points off the high. But this in sympathy with oil dramatically under pressure, and again, news out of China that their economy is absolutely slowing down. First, to the Chinese economy. Chinese economy is still robust. It's slowing down, but it was on pace, in my opinion, an unrealistic pace that it could maintain that for decade upon decade, and it had to at some point slow down. I think what we'll see in China over the next 10 years, I think this is a decade process, is a normalization, and more importantly, a normalization to what we consider to be good GDP in China, good growth in China, because the expectations of what it used to do and what it's doing have got to come back into sync, so to speak. Again, Dow Jones Industrial Average 284 points to the negative, which brings into light the trade that we put on yesterday. I apologize, but we did get stopped out today. We did go long the S&Ps. We went long the S&Ps once they were at around 1932. We put our stop at 19, just below 1910, so call it 1909, 21 point drop, 23 points altogether in terms of the loss on that trade. My sense on the S&P is we were trying to bottom pick, one, and secondly, we did it as a rally came into the market towards the end or the close of the market. The key was, and what I was a little bit disheartened about yesterday, was the fact that although when we bought at 32, it traded up to 40, it really sold off into the closing, could not hold positive territory. And so my sense was that I was really hoping that we would see some consolidation and a turnaround today, but yesterday we really saw the writing on the wall when it could not hold the particular highs as the market ran that small breakout that we saw. Now, let's take a look at our weekly chart to see if there's any major or long-term damage in the market, and that's what we're doing right now. This, of course, is our daily chart in the Standard & Poor's. Let's go ahead and blow this up a little bit, but you can absolutely see what we were talking about yesterday, and that is this particular candle right here that now becomes a star, and now obviously what we're seeing is a three-river evening star. Now what that tells us, we've got a three-river evening star variation here, we've got a three-river morning star variation here, and we've got just as many days in between those two patterns as we have patterns, and that tells me that we have a tight trading market with absolute resistance right now at 1938. That is this top. It's also the 61% retracement level. I also see that we have some very, very strong support down here at 1932. So roughly 100-point range, I think right now is determining overall what we are looking at within this market, because on one hand, it has not had the ability to break above this point, and it hasn't had the ability to sell off below this point. And obviously, this is really in unison, or sympathy, I should say, with what we're seeing in oil. And last time I looked at oil, we actually saw it break below $30 per barrel. And so traders, the real issue right now, and the real thing that many traders are watching besides the economic scenario over in China, is crude oil. Crude oil, $29.94, down at $1.67 a barrel, almost 5.5%. You're getting these really sizable moves. You're getting these moves on a daily basis. To put this into perspective, and we'll go ahead and we'll kind of blow this chart up a little bit, but we know about the intraday low that we had when we saw oil come back and touch 26. That occurred right here, about the 21st of January, then 34 being our top. We do get a three-river evening star here. Really no real pattern, candlestick pattern that's discernible here, but now this three-river evening star has actually confirmed. That's this confirming candle, and my sense is, all things being equal, without any kind of talk about a pairing of production with Russia and Saudi Arabia, my sense is that we could go see oil trade back down and test these lows at $26 per barrel. This has been Gary Wagner for Trending Markets. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.